Hi, my name is Alex Carlucci with GustanShow.com. This week, the Fed wants to cut interest rates, and I'm going to talk to you about how this affects mortgage rates. So, for the last few weeks, the Fed has kind of like put out there that they're going to probably cut rates. And what happens is a lot of people are telling me, hey, let's wait for the Fed to cut the rates next week to lock the loan. I'm like, no, it's already built in the market. So what that means is when the Fed announces 3 weeks ago that they're thinking about cutting rates in the future at the next meeting, and they meet like every 6 weeks or so, and the bond market reflects that move 3 weeks ago, not the day it actually happens. So what happens to the bond market, people start buying bonds, and especially the short end when the Fed's going to announce something like that prior to doing it, the market prices it in, and every day rates change and they get better after the Fed announces they're thinking about cutting rates. So what happens, the bond market prices most of that move in, and then when it actually happens, like when it's going to happen this week, the rates could go either way. They could actually bounce back and say this is the last Fed cut, so that's it for all these great Fed cuts from the Fed. Let's turn around, now it's going to go up, the rates are going to go up from here. So you don't know what's going to happen the day the actual Fed cuts the rates, because it's built into the market, their rate cut, and it's all about what's going to happen after the rate cut. Is there going to be more? What do they say at their meeting? How do they say the Fed's on the watch to be easy and keep the accommodating? That would be a sign that more rate cuts are going to come, so maybe we get better then. But we just don't know what they're going to say for sure, and that's what's going to drive the rates farther down if they say something like that. If they say we're done, we feel like the economy's in good standing, then that might cause the market to say, okay, rates are going to go up, so they might go up that day. So waiting for the Fed cut that day is not the right thing to do. If you're satisfied with your rate after the Fed announces the rate cuts, that's when the market really prices it in, and that's when you really want to take advantage of that dip, because you don't know what's going to happen after the day the Fed cuts the rates. And so watch that. You'll see how that works. The bond markets, you can look at the 10-year yield on maybe CNBC, and you'll see how it fluctuates the day they announce it. They talk about it for like an hour. There's interviewing, there's some back and forth questions, and you'll see what happens to the 10-year note. So right now, today, the 10-year note's trading like 2.05, and so when you watch the Fed announcement at like 1:30 on a Wednesday, you'll see that fluctuate, and if that number goes up, so it goes to 2.15, rates are actually going to go up. They're going to follow that. Now, mortgage rates aren't priced on the 10-year note, but it's a good gauge for the average viewer to watch what's going to happen to mortgage rates. We actually trade off what's called a mortgage-backed security. So that's kind of the skinny on how Fed rate cuts affect mortgage rates and how you can watch on your own, and maybe don't wait for the Fed to actually cut it unless you think there's 6 more cuts in the next year, because sometimes they announce, hey, we plan on cutting 3-4 times in the next year. The first cut may not be the time to lock it. Maybe you do want to wait for that cut and then see some more cuts after that. So gambling on your rates it's a risky business. It's for every $100,000, you're saving $8 a month. You're really playing with very small money, but if you're satisfied with your rate, lock your rate and move on, and don't look back, because it's going to drive you bananas. It's like gambling. You're going to drive yourself crazy stressing out about it. So if you're just satisfied with your payment, don't let it go up on you, because if it goes up on you, you're going to start hating yourself. If it goes down on you, you're going to be like, why didn't I wait? Just don't even look at it. If you're happy with the payment that day, lock it, and don't look back, and just go forward the process of the loan process. That's my best advice to you, because it'll drive you crazy. You can always refinance if rates get really good in the next 6 months. We'll do a rate and term refinance for you. And on FHA, we do streamlines, and there's barely any closing costs. We cover most of them. So give us a call. We'll help you out with that. My name's Alex Carlucci at 630-915-7550, or go to GustanShow.com and look up how rate cuts affect your mortgage rates. Thank you very much.